Rook side, we look to be just pulling our stable coins coming up here soon. And so this gives us another opportunity to just understand different protocols, different options a little bit more, where we can kind of park our money a little bit to get additional yield. I guess a little housekeeping before we kind of get rolling. We will not be going into the initiative section of Treasury Tuesday today, as we'll be kind of focusing, I'd say maybe around 45 minutes on this kind of panel. But maybe we'll kick things off with some quick intros and hearing a little bit about each protocol. So, Gabor, do you want to kind of kick things off and tell us a little bit about what you do at Maple Finance and what you guys do as a protocol?
Yeah, maybe Sid starts. He just raised his hand in time, so he can maybe start with the intro on Maple, and then I can join from the Maven 11 side, being a pool delegate.
Sounds good. Hey, Sid.
Hey, guys. I just saw there's a really old picture of me. So Maple's an institutional lending platform. So it's falls into the DeFi lending space. Think of it like the creation of pools which people deposit into. Each pool has a manager, and that manager is approving loans to institutional borrowers. So it's mostly serving market makers, market neutral funds at the moment, but generally crypto native firms. And it's been live for about a bit over 12 months, and it's at about 1.5 billion in loans to date. And then we've got Gabor here, who is from the Maven 11 team. And so Maven is one of the delegates who are managing the pool, which means going out, sourcing deposits, speaking to borrowers, reviewing their financials, approving and negotiating loan terms with them, and then ultimately servicing that book, which means, staying in contact with them each month to make sure that they continue to repay their loans.
Yeah, exactly. So just a very brief intro from my side as well. As I mentioned, so I work on behalf of the Maven 11 team in capacity of a pool delegate. So we're sort of the asset manager, like the BlackRock on the DeFi rails of Maple. We run two pools, one USDC pool, one Wrapped ETH pool. Keeper is a depositor in the USDC pool. This is one of the topics of discussion today, and we have came on the calls from time to time. As you remember, we have had an extensive AMA, but then also tried to jump in here just from time to time, just lurking in to hear what is important to your treasury and to your protocol as such. And very happy to be here and give the perspective, having been through the storm now with the whole team. We have 5 people working full time on this, and basically since 11th, we have been more or less, it doesn't sound healthy, but we have been working on this more or less 24/7, also together with the Maple team, and have tried to, be as close to all stakeholders and mainly the borrowers to be able to monitor the counterparty and default risk.
Awesome, and thanks for that. Yeah, we definitely have about $3.5 million deposited with you guys currently, and yeah, to your point, you guys have always been pretty active here and have always been willing to come in and kind of talk, so I appreciate that. But I guess turning attention to Teddy with Notional Finance. Hey, Teddy, you want to kind of kick things off and tell us a little bit about what you guys do over there?
Yeah, sure thing. So first of all, thanks for having me here. So I'm the co-founder and CEO of Notional, and Notional is a fixed rate lending and borrowing protocol on Ethereum, and it's we've been live for about 7 months. Notional V2, and we currently have about $175 million in TVL, and just recently surpassed $500 million in total loan volume. So Notional is an over-collateralized lending protocol. So we allow people to borrow and lend at fixed rates against Ether and wrapped Bitcoin collateral. We sort of serve a broad range of people. So there's some of our borrowers are more on the retail side, and then we also have some more institutional borrowers as well. Over the past week, I've sort of been thinking about, I think that the past sort of the market tumult and all this stuff that's happened in the past week or two has just really been in my opinion, a validation of what we're building in DeFi, not just Notional, but kind of all of us here, and just like showing the strength of, infrastructure that is transparent. So Notional ourselves, we've processed, a fair number of liquidations in the past few weeks, and there's we've had no insolvencies on the platform, no funds really at risk the entire time. We're actually working on, we're going to publish a little retrospective of how everything went, and I think what's something that's really cool about DeFi is again that all of the sort of positions of Notional's users are fully public for anyone to see. And so, when we publish this retrospective, you're going to be able to see exactly what happened and know that you have all the information, which is, I think, something that's very unique. And you just look in contrast to, the centralized crypto lenders, it couldn't be more different, right? I think that, probably a lot of us feel like that we're kind of on the outside here. You can sort of know over the last few weeks that something's going down, right? That there's these insolvencies, there's all this trouble. But I think, I personally, and I'll bet probably some of the others on the call as well, had this sense that, well, there's all this stuff kind of going on in back rooms, right? Where they're kind of cutting deals as to who's going to pay what and ultimately who's going to take these losses. And that's all completely obscured from public view. And everybody else is just sort of left totally in the dark with their assets frozen, and it's just not great. And you contrast that with DeFi, where everything is completely, transparent for everyone to see. And I think, the past few weeks, just a great demonstration of why what we're building is important.
I can only second that what Teddy said. The transparency is one of the key issues. No one knew what certain counterparties have on their balance. It's a lot in the dark, hidden in huge balance sheets. I mean, the companies that have struggled, balance sheets are massive, and no one or very limited people know exactly what is in there. So even if you are comfortable with having your crypto on Celsius, Nexo, BlockFi, etc., it's very hard to know what happens exactly in the background. Whereas that is one of the big strengths of DeFi, that whether it's Notional, whether it's Aave or Maple, you see exactly what's happening with the funds. And this is a very clear instance here for Maple, where you can see the pool, you can see exactly which counterparty is in it, and what you can track the news on Twitter and what have you. Whether a company may be in a very strong position, like market makers, for instance, they have done all very well, and it's a complete different level of auditability that DeFi provides. So that's very bullish for the entire space.
Yeah, without a doubt. I think externally, people outside the space, they see what's happening, they hear the high level and of the situations, firms, funds blowing up, and most of them are all centralized entities, but they relate it to DeFi, and it's complete opposite. So that's what we're here to combat. But I definitely want to dive into a little bit more, but definitely want to give Windra a little bit of a chance to introduce himself and Element Finance. Hey, Windra, you want to go ahead and do the quick intro as well?
Yeah, thanks for having me here. It's great to join this community and see what you guys are up to. I am Windra. I am part of the founding team at Element, and I currently lead growth and strategy. Element is a fixed income issuance and marketplace. We pretty much wrap external yield sources that are currently existing in DeFi, and we turn them into fixed rate income type of products that users can buy and earn a fixed rate out of. And, we've been live on mainnet since the middle of last year, and we're currently entering our V2 audits, soon to be announced in the next month or so. So far, traction has been really good, and most of our users actually are, I would say, on the conservative side of asset deployment, especially in regards to crypto and DeFi. I would say we have a lot of DAOs that use our protocol. We have a lot of institutions or just conservative family offices that are currently trying to explore the space. as well as some, revenue generating companies that are specialized in crypto. They also use us for more like an asset management, treasury management solution. And yeah, just happy to kind of go into that a little bit more. Yeah, definitely the last 2 weeks have been kind of crazy. As you can see, a lot of the top-tier DeFi protocols have not really faced any issues. However, all the centralized entities such as the Babel Finances of the world, Celsius, BlockFi, the ones that are kind of covered in a black box, those are the ones that have issues, and users that have funds in those specific platforms are the ones that are a little bit wary at the moment. So I do think that the past month or so has been a pretty big bull case for DeFi in general. I think Teddy and Sid has mentioned transparency, and I agree 100%. I think DeFi, these type of instances, is what I think creates a lot of adoption and growth and awareness for the necessity of DeFi in general. And like I said, just excited to be here and talk about some of the conversations I've been having with users and institutions and DAOs in general. In the past month, I know people are a little bit scared at the moment, but I think having this conversation definitely helps.
Yeah, I think you guys all hit on a really good point. I'm always going back to like what the rest of the world, what's the rest of the total addressable market, at least how I see it, really think about the space. And, I think one thing that's really lacking is the lack of understanding about the full transparency that we have because of the power that is blockchain. Could you guys maybe, this is going to seem a little obvious, but could you guys just kind of talk a little bit about what do we need from an educational standpoint to really open up what is probably your total addressable market, and maybe talk a little bit about that, but just speak to what do we need to do from like a industry standpoint to help educate people, to show them that there is a greater power in the transparency, and that the protocols that you're building are truly like light years ahead of what TradFi is building and has built in the past. And anybody can kind of take that.
Yeah,
right,
sure.
cool. Teddy, you go. You go. No, you go.
Okay, sure. I'll go first. I mean, I think from a growth and strategies perspective, in the past 2 weeks, we've kind of taken a much more educational approach, as you've said, when engaging in conversations with a lot of the users that are not so sophisticated with crypto and DeFi in general. What's really interesting is I think that the Terra Luna situation was a big red mark on the space in general, much bigger than we think, because from the outside looking in, UST and Terra in general was like this $40 billion stablecoin. That's exactly what people described it as. It's like a one-liner, and it's a $40 billion stablecoin. And now, because it collapsed, the initial thought that everybody who isn't fully aware of how the mechanisms of everything, how it works, is that if a $40 billion stablecoin collapsed, any other stablecoin can collapse. So, we have started to really take a new approach in confidence building. We've just started back from zero, explaining to a lot of our users exactly why this stablecoin is different than that one, how DeFi works in general, why blockchain matters, transparency, and all those things. I think, because so much trust has been lost, we are currently setting ourselves up for the future. We're currently re-educating everybody so that one day, when they are fully aware of exactly how things work, when they are ready to make that jump, and when the market, recovers a little bit, I think the entire DeFi ecosystem is going to pick up a lot more users. So that's where we've kind of taken our approach in terms of growth at the moment. Not necessarily user acquisition right now, because everybody, like I said, everybody is scared, but mostly try to make sure everybody understands what exactly is happening in the space. Kind of take it month by month, week by week, so that, like I said, by the time everything starts to pick up in terms of confidence, these users are ready. They're ready to deploy capital. They're ready to use these protocols and test out, Notional and Element and Maple and so forth.
Yeah. So I would also just add that, not everything is in your control. So I think some people will have seen what's gone on with Terra and just kind of write off the space, right? And ultimately, for somebody to learn, they have to be receptive. There has to be some, it's not all one way. People need to be need to want to understand, so, and not everybody does. But I think, putting that aside, I think in general, like, you want to show and not tell, right? So I think that, like, we say words like transparency and decentralization, and like that's stuff that these are like words that you can say, but it's not clear what it actually means. And I think that it's really like, making the most out of like time periods like right now, right? Like what we've seen kind of in the last few weeks. Because again, what we all said just a couple minutes ago, like how this was such like a great demonstration of the value prop for DeFi. I think it's really just like, it's trying to use real world examples like what has happened here and just hammer them home with sort of like proof. And that's why, like, why I mentioned earlier today, or like earlier in this call, that like, we are going to publish a full retrospective of like everything that happened on Notional and like every liquidation and like exactly how quickly the accounts got liquidated after they had become under collateralized, like a full explanation of how it worked. And just like, you can go back and you can look at the blockchain, right? Like you can see like, all right, within 15 seconds of the Oracle update that like caused this account to become under collateralized, there is a transaction submitted and that liquidated them, right? And like, I think it's like, so I think it's showing people like, and not just saying it's transparent, but like, what is it being transparent allow you to do that you can't do in CeFi? And I think it's that you can really like take people step by step through how the system works, and just really show it to them in a way that you can't do, with these CeFi lenders. And you have to hope that like people are receptive to understanding the difference, like that they want to understand, and then you just show it to them. Yeah.
Yeah, we have a lot of conversations with institutions through, we have a director for institutional sales, so his job is to talk to them all day long. And actually, what Teddy just says, and we take it even further. So we are also working on education material, and we don't even show how things worked out, but even are able to prove and provide evidence that it's even better than traditional finance. Like the New York Stock Exchange would have closed down. I mean, that's what happened in 2008. DeFi just continued working. Liquidations went smoothly, even though price action looks painful, but everything works perfectly. And it's actually extremely bullish. So in the short term, we are all suffering, I guess. But if the dust settles, we have a very strong storyline here. And I think many institutions or professional investors have waited for this kind of battle test. And if we manage to get through this storm well, I think this will be, in the medium or long term, a very, very strong story.
Yeah, I really like all your take on that. And, I think one thing that's missing from the conversation, I think a lot of us are probably aware of that, but, we talked about the craziness over the past couple of weeks, the strength of DeFi in these trying times. But, one thing maybe we should do is just kind of define what, from your perspective, what you think has happened. I think we've all seen on crypto Twitter and from our own perspective and rumors, but, if you guys were to kind of take a step back and look objectively about what you know and looking at it from a data-driven perspective, maybe other connections you have, or maybe even firsthand knowledge based off of what you're seeing in your own protocols. What exactly, obviously price has gone down and that called a cascading effect, but, would you guys like to talk a little bit more about the mechanics of the market and how maybe this has caused the major price catalyst downward we've seen? Do you want to kick that off if you have any insight?
Yeah, I mean, I think that, granted, as someone who isn't like inside, like exactly what's happened over the last few weeks, I mean, I think it's pretty clear. It's just been like, forced liquidations, right? So we saw, I think, we saw some of that in DeFi, right? So some of that on borrowing protocols like Notional or Compound or Aave. And I think that, there was a whole lot of it that we did not see. Because I think that, basically the liquidations weren't restricted to DeFi, right? And the big price down, move down was like, yes, part of it was liquidations in DeFi. And I think a lot of people like on Twitter and stuff focused on that just because like you can see it. But I'm sure that, there were really big trades going through, like related to the sort of CeFi lenders. I'm sure that's the case. Yeah.
Anybody else have a take on any knowledge that they have or any thoughts on in their perspective?
Yeah, I mean, what you're seeing in the whole space, though, in terms of what's driving this kind of downward shift is, delevering of the system. So the cost of carrying debt was way lower before. Now the central bank is raising interest rates. It's sucking lending and leverage out of the system. And that makes its way first to crypto assets because it's a smaller market cap with less liquidity. So I think that's driven liquidity out of this as an asset class, and it's just reverberating through DeFi. I mean, it's occurring both in CeFi, where you saw a pullback in liquidity in lending platforms like Celsius, Celsius, BlockFi, Babel, and then that makes its way into the system because those players are big traders, both across the centralized and sort of decentralized protocol space.
Yeah, so that's actually interesting what happened on the CeFi side. So they have been a competitor to our pools basically since Maple launched, and obviously they have been around for a way longer time. But the funding is just a complete different source. So we have our funding on Maple from people who proactively opt into or decide to deploy capital to a certain asset class, being under collateralized loans to crypto native borrowers. Whereas on Celsius, I would say many customers or users are perhaps not fully aware. They just saw that there's a certain APY promise and perhaps didn't question where this comes from. And the capital base was growing over time, obviously with the bull market. And while we have no clear visibility or insight into how the loan book is or has been managed with Celsius and peers, it is clear that there was a mismatch in loan tenors. So they have only a very short-term funding because the deposits can be withdrawn or should be able to be withdrawn on short notice. And in the same time, the capital was deployed not in a way that it is equally liquid, i.e. Engaging in staking offerings or staking products or handing even out term debt. So this was also one of the reasons that has caused a liquidity crisis. And I think what we have seen is, and maybe someone was around in 2008, it sort of felt like exactly the same. It was a liquidity crisis where perhaps a company was not insolvent due to too many losses, but it was just illiquid. And once you're illiquid, you try to get the money from wherever you can, and then this has also been instrumental to initiate the liquidation cascades.
Yeah, I think it's probably important to note that, based on the headlines you've seen over the last few days, you're seeing the evolution of effectively an FTX put on the space, which is probably going to lead to more concentration among the centralized, or CeFi crypto providers, because it's going to depend on having backstop liquidity from FTX. Whereas I would say in DeFi, what we want to resist the urge to do and kind of do instead is to build, continue to build protocols that are self-sustaining and that continue to work as intended, without the need for this kind of backstop, like a backstop line of credit.
Yeah, I think that's like a really interesting point, right? Is that we've seen, FTX is basically from all accounts has essentially bailed out half of these CeFi lenders. And I'd actually be curious to know, and I don't know if there is a way to know, but like I'd be curious to know, like, has sufficient liquidity been provided, right, to the system to ease that liquidity crunch that we're sort of talking about here. And again, it's like it sucks, right? Is that like if you're on the outside, if you're like not Sam, Bankman-Fried himself or somebody that works really close to him, it's very, very difficult to know like the state of the sort of aggregate liquidity in the system, which obviously just really sucks. And like if this were all sort of transparent and done on chain, everyone would be able to know. But like as it stands, we don't know if there are people that still need to sell their staked ETH or not. Right? We don't know if all that has kind of happened or not. So I don't know. I mean, I would love to know. But again, it's just sort of a testament to how opaque CeFi is and just how it concentrates information asymmetries. Yeah.
Got it. And I really appreciate all the takes on that. And I promise I won't be focusing on all the FUD and headlines. I just figured it'd be good to kind of get that out of the way. But, kind of diving maybe one more aspect of FUD, keeping that theme going. I know we've talked about there being a liquidity crisis. We're kind of unsure about, how much still needs to be sold to kind of, ease this crisis. And I know there's been talks about, contagion risk. What do you guys think about? Are we still at a point where we can see a lot of contagion risks in the DeFi markets, in crypto at large? Gabor, you want to have your take first?
Yeah, I mean, this statement is perhaps more based on sentiment, but my gut feeling is that we have hopefully seen the most. I mean, there was a heavy and concentrated liquidation activity that was very well traceable on chain. We have seen the domino pieces falling one after the other, going through staked ETH, etc., etc. And it feels a bit, or at least there is no evidence that there is something next. And there was contagion starting with Luna that has led to holes in balance sheets. Then 3AC came around the corner, Celsius. And I think the backstopping from, I would say, that the central bank of crypto, being FTX, probably can provide some comfort. The numbers are huge. It's actually pretty impressive that they, within this short time, are able to provide these backstop facilities, and that should be able to bring some calm to the space. We have since actually Luna started, been extremely close to our borrowers and have even intensified that since Celsius, basically having daily interaction and even physically met a couple of borrowers when there was an opportunity to do so. And we're also meeting some this week, very close. And there we see unchanged metrics. So given the business they operate in, it's not that they are. So it is a lending crisis, I would say. So there are different business models, and you probably need to watch all the lenders that are intertwined in the space. The ones in our pool being market makers, mainly some yield funds. And with the yield funds, then obviously the risk is that you have too much exposure to Anchor, which was the guaranteed 20% yield, as we all know, very much guaranteed, which we have not seen across pools on the Maple platform. And market makers, they actually benefit in the short term from price action and volatility. They have actually been rather complaining before all this has happened that the market is not volatile enough. And so on that end, I don't see contagion risk. But I think this will slowly uncover if there's a next one. But with the liquidations we saw on chain, and I hope that we have seen the not only the tip of the iceberg, but also how it all played out.
What's your take, Windra? Have we seen more than the tip of the iceberg? Have we seen the full thing?
I think we have, because a lot of the major platforms are salvaging their positions. I do think that there are going to be some short-term pains for some of the smaller players in the space. I know some smaller centralized exchanges, for example, did treasury management solutions with some of these funds. A few, aspiring lending apps out there that are based out of Southeast Asia who cater to that clientele. They have treasury management solutions with some of these big funds, and that's why some protocols that were just simply builders who received investments, they also lost some of their assets and capital. So from like the building side, from the protocol side, there is going to be some pain there. They're going to have to figure out a source of capital elsewhere to be able to continue building. But, for the likes of Celsius and BlockFi, it looks like majority of their capital has been, somewhat, like I said, they received the credit line. So, I do think that they're going to be just fine. And they're the ones that were, I would say, probably at the position to cause the biggest downside cascading risk to the price of the market. And so because they have been saved, I think the major problems have been relinquished a little bit. It's just, like I said, it's just a lot of the smaller players in the space that probably are not going to get bailed out, which is unfortunate, that are going to be hurting for, I would say, the next, 6 months.
Cool. That's very helpful. Very helpful. And, we'll go ahead and switch gears away from the FUD a little bit and kind of turn a little bit more positive, a little bit more informational for the community, and kind of help them understand what they can do to kind of become better investors, just better people in the space. So maybe talk a little bit about what you guys pay attention to from a metrics perspective, whether that's a crypto metric, whether that's a TradFi real world metric. Obviously, like interest rates are really impactful to you guys, as well as just, I guess markets in general. But maybe talk a little bit about like what are the metrics that you really focus on to not only just understand how it may impact your business today and tomorrow, but just like where you want to go as a business and as a protocol. Teddy, you want to kick it off?
Yeah, sure. So I think like probably the number one metric. I mean, there's some like easy shorthand ones like TVL and sort of total loan volume. I think that what we want to see more of is the ability to generate yield via notional. So like the thing that we're kind of most focused on is increasing sort of like open borrowed amounts, right? And I guess because my feeling is that I think what we've seen is that if the yields are there, like getting capital in is really not so much of a problem. Now, like multiplying the amount of capital in DeFi by like 10 or 100x, like it wouldn't be easy. But like if there's money to be made, if the yield is there, like getting the capital in is not really the problem. I think that like what we're looking for is like the thing to look for is just like how can you generate those returns in DeFi, and then how can you like package those returns such that there's like an easy way to like for outside capital to invest in them, right? And I think that's like the most important thing is like how like capable is the DeFi space at like generating returns, right? In one way or another, right? Whether it's people borrowing against their crypto, just plain vanilla, or if it's like trading fees on DEXs, or it's like just, credit, like DAOs actually wanting to borrow money to like finance their operations, right? That's all like different ways to generate that like DeFi as a system generates returns for people who have capital. And what I think for DeFi to grow, it's really like that is what has to grow. It's not like, the capital is going to come in first and wait around, right? It's that like the DeFi system as a whole just starts making more money. right? And like that's like the really important thing, because again, I think it's a lot easier to get the capital in when the returns are good. Yeah.
What's your take, Wendra?
For my take, I think one of some of the more important metrics that we pay attention to and I think about a lot is just the abstraction of risk from these DeFi protocols in general. I think because everything is so new, the outside looking in to participate with these protocols is that it carries a high level of risk, whether that's rep risk, compounding layer risk, of different various protocols that are being utilized. There's default, there's DPEG risk from various stablecoins. So I think through the test of time, of course, through these different incidents that happen in the market that really affects how crypto is behaving, I think as time goes by and as the level of risk goes down, more and more people are willing to participate. I've had conversations with family offices from Taiwan, for example. These are like some of the most conservative people who've done real estate for 20, 25 years, and they generated 8% average return. And their perspective is if they can get 8% guaranteed per year doing exactly what they've been doing for the past 25 years, what's the incentive for them to participate in DeFi when they are exposing them to all these unknown risks in a space that they're not familiar with? And I think that eventually we'll get to a point where those risks are no longer an issue and we can get competitive rates, 5 to 8%. And it will be a place and a platform where a lot of these conservative users can come in and participate. So a metric that I look into is just how we tackle some of those external risks one by one. And it's such a different space now than it was a year and a half, 2 years ago. A lot of these mature protocols have started to really tackle a lot of these risks and eliminate them. And so I think we're headed in the right direction.
How about you, Gabor? What are you paying close attention to?
Yeah, a bit of everything that Teddy and Windra said, and yeah, maybe just an anecdote. It's funny what you said that the family office of experience and track record of 8%. Like, why would they engage with crypto? We have had the same conversations with some other professional investors or family offices, and I think these people they don't get the point, and you can't generalize that crypto is per se more risky than, say, real estate. If you engage with rather safe protocols like Lotional or Aave, like why would you say that this is more risky? Of course, there's some oracle risk. There was this one exploit surface that was uncovered on Aave on the L2s, but still, like, these protocols, I would rather put my money there than in some emerging market real estate, to be frank. So education is very important, and I think we are all putting our strings to educate people that crypto is just perhaps a different and more efficient infrastructure where you can potentially get a decent yield and probably with a good risk reward. It's interesting that when someone promises 20 or 30% APY on a stable coin, that everyone throws his money on it. But if someone gives a stable yield of 6%, people are rather turned off. It should be vice versa. Maybe this is where we are heading right now, is that people get back to a healthy risk reward expectation, and you should rather doubt that someone promises you 30%. But we were upside down on that one. The metrics we're looking at now, focusing on Maple, or I personally being responsible for the risk, is actually the probability of default and the expected credit loss. And given that we are staking a pool cover tranche, this is the first loss piece, we are super focused on keeping a clean sheet, because if we have a default and a loss, we are the ones that are taking a full hit. So not having a loss is our utmost focus. Less TVL. TVL is a important metric for all protocols. It is a bit used for signaling and the success. But now is the time where we want to be sure that the protocol works as intended and that the funds are safe and that the asset class is not only working in sunny times, but also when it rains, and that the risk reward that we have promised at some point a year ago is actually accurate, or maybe even proves that is even better than what we thought. So TVL may go down now. I understand if people are worried about or just want to pull funds together just to be on the sideline, or even YOLO all in because the prices are low. So we have also had people withdrawing funds because they want to market buy. I understand that. So TVL is a bit less of a focus. Of course, we want to grow long term, but in the short term, it's really about proving that we all do a good job, and I think this is the case for all protocols right now.
Got it. That's all really great insight, all. And one thing I guess to say is I know Teddy needs to run. I know he has a hard cutoff. So just wanted to thank you, Teddy, for stopping by and maybe give you the opportunity to have any final words. But if you have to run, that's fine too.
Yeah, thanks a lot for having me. I think we're all building something really valuable here, and again, past few weeks I think have made that more clear than ever. So again, thanks for having me, Matt, and see you guys all later.
Thanks, Teddy. Really appreciate it. And Gabor, Wendra, hope you guys can stick around. If you have to leave, feel free. But one thing I wanted to unpackage was we keep talking about the interest rates we've seen, some that are obviously under ones that are just not sustainable, right? We talked about the anchor situation. We've seen other situations where it's just a very, very unsustainable high yields that we know will never going to last in perpetuity. So I wanted to kind of dive into a little bit deeper about what we might see with rates long term. I think we have seen a pretty large delta between DeFi rates and TradFi rates. And so obviously there's a lot of attributes and criteria and variables that are causing that. But maybe talk a little bit about, pull your crystal ball out. What do you guys see about that delta between DeFi and TradFi rates long term? What do you think we'll kind of minimize those as much as possible? Or is this going to be a situation where DeFi is going to win no matter what and TradFi won't really have any rates to offer? But just any insight on where you see that delta ending up long term?
Yeah, very happy to start on that, and then Wendra can give his view. But ultimately, it comes down to supply and demand. And pre the crash, we have seen an oversupply of capital on the CeFi side, and this has led to a lot of pressure. They had to get the money out to fulfill the promises they made towards their depositors. And on DeFi, with this deliberate opt-in, and if the yield is not juicy, it's very mercenary capital. You just shuffle around. So DeFi clearly had the disadvantage on the funding side. Now this has pivoted. Currently, we observe many cancellations from CeFi, given that they need to serve withdrawal requests as well. And there's a lot of liquidity leaving the system, which is actually a great opportunity for DeFi. So with the addressed market by us, i.e. crypto native borrowers, there has been limited loan issuance, but we know that the rate has leaped from, say, a range of 7 to 8.5%, 9% to clearly double-digit, 12 to 15% even right now. The volatility creates ample opportunities to run highly profitable market-making algorithms, and what is scarce right now is capital. So currently, I think it's actually a pretty attractive time to provide credit. This is actually the time when you should do it. In the medium term, this will, I think, reverse a bit. With the safety lines that FTX provides, this should bring some more security to the CeFi side, and they will re-enter the space, I guess, but perhaps a bit more cautious. So there was a clear lack of proper credit standards. I'm not saying that they all did a bad job, but it was just too loose. It was like the 8 times leverage structures ahead of the financial crisis, and it was the same here, that the credit standards, they should be a bit better, and they weren't. And I hope that just the whole space emerges as a bit more professional, hopefully way more professional. So in the long run, this is really crystal ball game, but I think the rates should be more close to each other. If one of the both camps is cheaper for borrowers, the borrowers will opt for the cheaper one. There's very little justification to pay a premium. Like one premium reason could be the track record that you build on chain. If you have lending activity there, it's registered how much loans you've taken, that you always paid in time the interest, you returned your capital or your loan in time. So there is a benefit. So there's a reason to pay a bit of premium, but you don't do a 3-4% premium. So they should align again. But in the short, medium term, I think DeFi has a great opportunity to have better yields than CeFi.
What are your thoughts, Windra?
Yeah, I do think that the maturity of the market is going to cause these interest rates and these yields to converge. If you look at, getting a collateralized loan on something like Chase Bank at the moment, I think it's like they're offering like a 2% rate. And if you want to get like a credit loan on Chase or Wells Fargo, it's 8%, depending on your credit. But those seem to be similar numbers to what we see in DeFi. And the difference is that, when you pay 8%, that 8% goes to Wells Fargo, even though the users that are depositing into their savings account is the ones providing the capital. But in DeFi, it's different. It's the users that are actually providing the capital that are getting the 8%. I think that the big difference here is, I think, on the structured product side. I did capital markets in 2018, and I worked with a few brokers who traded structured products, and those brokers take a huge cut on the fees that are generated from the profits gained on those structured products. And the difference between CeFi and DeFi is that when you create and compose on DeFi primitives, everything is on chain, and you can see exactly how that product is. Therefore, it gives anybody a competitive advantage to be able to undercut somebody else who is effectively taking cut from the user. If product A is offering a 5% yield, and kind of look under the hood and realize that 3 different parts cut from that DeFi structured product, you begin to somebody else can reconstruct that product and start over, effectively offer a better product and a higher rate to the users that are interested in buying those products. And I think that's the competitive advantage that DeFi has, taking that aspect of transparency to always be able to offer great yields to the user in comparison to what they are accustomed to seeing in traditional finance, because I've seen structured products take, 10-15% for a basic principal protected. And so, I hope, not to see that in DeFi, of course, but I do think that's one of the competitive advantages that DeFi has in terms of characteristics in regards to the yields.
100%.
Yeah, I think based on all the things that you guys said, as well as some things that maybe have been gone unsaid, really about how capital efficient DeFi is, the transparency of everything, the forkability of it, and how people always have to stay, maximally competitive, definitely give DeFi an edge. And, I don't really see many situations where TradFi ends up winning in the end. But, with us kind of running out of time, I know we talked a little bit about FUD. We talked about some of the major things that you guys are keeping an eye on. Leave us inspired. What do you guys see as the end game of DeFi? Like if you look, 10 to 20 years, even though that's hopefully not the end game for what we're building here, but if we just kind of look at that time horizon, where do you think DeFi is operating at? What does it look like at that point in time? Windra, you want to kick it off?
Yeah, I do think that, in 10, 15, 20 years time, DeFi is going to be just called finance. I think this is where everything is headed in terms of financial product construction. I think that DeFi primitives are well built to survive a lot of things that, centralized finance platforms are not built to be able to survive. I think someone mentioned earlier that when the crash happened in 2008, the New York Stock Exchange had to down and things had to unravel a lot and nobody knew what was happening behind the scenes. And that's not necessarily the case in regards to DeFi, I think if we can survive things like this, I think it's really, really important to kind of pay attention to, what comes out of all of this in the next year or so, because those are going to be, the players that are going to be surviving and thriving long term, and can't wait to see some of the new iterations of these products and protocols get built out, because I think that this is where the future of finance is.
Yeah, fully share this vision, and I guess like most people here on this call are already using DeFi as Fi, I would say. So probably receive salaries in USDC streamed through protocols, use DeFi for saving, use DeFi for lending. So I guess the infrastructure even today is already pretty impressive and fulfills many of the basic financial functions. And from here, we just need to continue build, make it more sophisticated, make it more secure, less attackable, less exploitable, more efficient. I mean, we are all pretty much believers in this. So in this panel, there was no TradFi voice, and I guess it's pretty hard to argue against all the merit that DeFi brings. So it's just about getting more people on board, educating, and showing the power of it, and then people will join, and it's becoming a bigger movement. And I also think that DeFi will become Fi ultimately.
Well, I'm definitely excited for that. I have 2 young kids, and I really hope that they grow up in a world where maybe DeFi is not a term unless it's in the history books, and it's just, as you guys put it, just finance, and it's all on the blockchain. I think that'll be a better world for everybody. And so really appreciate you guys coming out. I know we have some house cleaning items, some updates on our end. So wanted to kind of reserve some time for that, but wanted to kind of give you guys some final word. Did you guys have anything you wanted to kind of leave us with? Anything that we should be kind of aware of as we kind of leave this conversation?
Yeah, thanks for having me here. Really enjoyed the conversations and the questions. If anybody's in New York, I'm going to be judging ETH NYC throughout the weekend. Just come say hello. We'd love to talk to you all about everything. So anything related to DeFi or anything in general. Just thanks again for having me.
Yeah, likewise. Also, thanks for having Sid and me. Very happy to come back at any time when there's a similar panel to give some insight into what's happening in the lending side. And I'm a bit sad that people stopped saying "work me," so I'll end with this. Work me.
I like it. Well, again, really appreciate you guys both coming out. We'll definitely continue the conversations together, and see how we can kind of deepen our relationships. But it's been really awesome hearing your perspectives, and again, like similarly, all these kind of these panel calls and these conversations, I'm definitely leaving a better informed investor and just a better all around crypto native. So I really appreciate you guys coming out. But feel free to stick around for some updates, and otherwise, again, appreciate you guys stopping by. But I guess moving on, and apologies if anybody has the agenda open. We're definitely scrapping that and kind of looking at different things today. I don't know if Hazard, if you're listening right now, but Hazard, I know you had an update from your end around some compensation. So I don't know if you want to hop up on stage and kind of talk through that a little bit.
Hello. This is sort of inside baseball for the DAO. So anybody who wants to stay and talk about compensation is welcome to. But you don't have to. This is sort of an addendum. Let's see. So we discussed last Friday at our governance town hall about the fact that given the market conditions and so on, that we had sort of accelerated some things that we'd been looking at regarding the current way that we compensate contributors. So we had formed an internal working group based on some of the things that we'd been learning about how contributors were kind of living with their compensation a few months in. And we'd also received some feedback from some community members that they'd expressed some concerns about the potential for overcompensating or undercompensating contributors because of the way that things were structured. And We assessed some of these things along with what our own findings were based on speaking with our contributors, and found some of the same things. And so we started making plans to craft an updated compensation structure, right? And but market events have sort of accelerated this, and although our new compensation, what we're calling compensation 3.0, is not fully ready for adoption by our contributors, we have crafted a sort of compensation 2.5, a kind of bridge to help contributors get from where they are in compensation 2.0 to where we hope everybody will be happy and comfortable for a long time, which is compensation 3.0. So I pasted into the general chat a document outlining this basic structural change. I'll paste it into the voice chat channel as well. Okay. So this was requested to have some more structure to look at. So, obviously compensation for contributors is a sensitive topic for everybody. And we've approached this as we approached the last round of compensation with commitment to transparency about how we're doing this, the reasons we see for everything that we do. And it's not something that we're doing in the dead of night and throwing a switch. We're here to talk about it because we're a DAO, and that's what we do. That's what we have to do. So I see, Priest, that you've got a hand up. So I was about to open this up for discussion. And I see Kyle that you tagged Unleashed as well. So hopefully he's able to join, because I know he had questions too. So.
Yeah, I think it might help a little bit if you just walk over the change from. I'm already aware, but like for people that are not aware, haven't read the document, the change from compensation 2.0 to compensation 2.5 and what that would entail for the DAO and compensation levels overall.
Sure. So just to be clear, so we're talking about a change in structure. We're not talking about levels right now. So levels are how much each person gets paid and how that works. This is more about how they're paid in terms of what assets do they receive, when, how many, and so on.
I want to addend them quickly there. I do believe that this would be a change in levels because as the current compensation ratio stands, not compensation 2.0, contributors will be paid in a maximum of 176,000 in stables plus Rook, with a Rook strike price of $100. And because even though the level, baseline or headline number wouldn't change, the actual salaries that they are being paid under compensation 2.0 would increase drastically if they were to adopt it, simply due to the reality of the market moving against Rook price.
Well, it's not
under compensation, the original compensation. If they were to have taken the entire salary in Rook, they would, under compensation 2.0, they would be paid 5 times as much as they currently are.
Sorry, 2.5? Do you mean?
No, under our original compensation, if one contributor chose to take their entire salary in Rook, if they were to adopt compensation 2.5, they would now be paid 5 times as much as they would have been previously.
For 2 months, that's right.
Yes.
And they would be paid in USDC. That's
yes.
Right. And it's the notional value. So being paid in Rook, that is, they can't liquidate, is not super helpful. Right? And so it's not simply that because the market moved against them. There's more things here than just that. Like I said, we had started down this road well before this market crisis was happening, and we were getting questions from community members about this well before as well, because there's a potential for, unbounded upside for contributors that would take all of this Rook at a strike price of 100, let's say, which is the minimum strike price we've granted. Another problem is that if we wanted to onboard somebody today and be fair about it, we'd have to grant that person a strike price of basically $20 for 3 years.
Yeah, I don't disagree with the new compensation structure. Right. Let me be clear about that. What I do disagree with is, first of all, now retroactively changing compensation, obviously notional value doesn't change, actual value does change drastically depending on what kind of compensation structure they originally chose. It is a retroactive.
So there's no actual retroactive. Nothing here is retroactive.
Actual money being paid out by the DAO.
sorry, but this is talking about 2 months from the point at which this would be adopted. So if we adopted 2.5, that would span from the period of the adoption to the adoption plus 2 months. So there's nothing retroactive here. And if their total compensation, which is the notional value at signing, right, of the total USDC plus Rook, that total compensation number is what we use.
The actual compensation does change.
So if you're no, I think
the amount the DAO currently has to pay out would change.
That's
yes or no?
True.
Like the amount that the DAO currently has to pay out.
Yes, the assets have changed, and the amount of one of those assets, USDC, being paid out is different because USDC is pegged to the dollar, and the total compensation is quoted in dollars, and Rook is not.
Yeah. So why not adjust?
That's not a change in leveling because the total
why not adjust compensation 2.5 to solely taking out the current, like whatever base they chose, let's say 50% in USDC, 50% in Rook, you pay out in compensation 2.5, 50% in USDC, and then take the current value of the Rook that they chosen and just pay it out in USDC.
So why?
Just to provide stability.
But let's just walk through this example. Okay, so that's a fair question. So what we want to do is to induce contributors to change to
You cut out there, but
we want contributors to change to 3.0, right? So if I tell them
the option to change.
Well, we did give them the option. We have.
Yeah, no, I don't think
so
necessarily
So let's say that I say that you have the option to change, okay? And between now and when that's ready, what I'm going to do is I'm going to give you the amount of USDC that you're currently receiving, plus the amount of USDC that your Rook was worth at the Pico bottom of this current market move. So I'm not sure why that would be something that would be of interest to any contributor. Why would they want to essentially lock in?
You stated quite concretely in the document that the main concern here was about volatility of salaries. If they want to
the concern for why we would no, I'm sorry, Priest. If we were to move, the concern about volatility was when we were designing compensation 3.0, because since the price.
I know, but you're asking why a contributor would choose that. If they wanted to reduce volatility in salaries, then they can still choose to go to a 2.5 salary with the current price of Rook, just paid out in USDC.
How would this be an improvement? What would be the biggest thing that this would do that would make it more attractive? No. Okay, let's say I accept the volatility. So how would that structure that you've said, like what would that how would that help? Oh,
you can't just say accept the volatility. Volatility was one of the main concerns listed. If Rook drops another 90%, that portion of your salary would drop by 90%. If you don't want to have that risk, then you can move to compensation 2.5.
So I'm telling you, let's say that that's good. So what would be the major benefit of doing compensation 2.5 Priest edition? What would be why would that be?
Reduce the volatility of your salary.
So if you're currently getting paid 100K
in USDC. Okay, let me just give you an example. Whether you currently get 100K in USDC, 50K in Rook at current Rook price. Rook drops 90%. Now you get 100K USDC and 10K Rook. If you go to 2.5, you get 150K.
So you're saying that if you would like out of the Rook volatility, I'll let you get out at the bottom.
Yes,
which is fine. Okay.
How do we know it's the bottom?
Nobody can say.
Exactly. That's what 2.5 is for.
So what I'm asking is the concern about the amount? Is the concern here about what I'm hearing is a concern about the amount?
It's
threefold outflow.
It's threefold.
Okay.
The initial concern is regarding, first of all, who would actually get this? Like, would this also be offered to, for example, you? Or is there like a salary cutoff?
The way to do this would be to offer it across the board. So let's start from that.
That would be my first concern. I would not like a 720K salary being paid out in USDC.
I am not paid $720,000 a year. I'm not sure why people keep saying that.
What was the notional value there? Well, 722K, like 500.
No. I think it's 600 and something. I mean, it's not, I'm not saying it's small, but it's not 700 something. I don't know where that number is.
690, I'm sorry.
Is it? I don't know. I actually don't know because most of it is not able to even be used.
Hold up, 21344. But 2 is 672,000.
Sure, that sounds righter. Okay, but it's it's a big number. Sure.
Yeah.
Okay.
That's
All
the
right,
first
so
issue.
that's item number one.
Second issue is that as it currently stands, I do believe that the DAO should have voting rights over whether or not such a proposal would be adopted. Because treasuries, especially with for a protocol as large as Rook's and with no positive cash flow, I believe that treasury is probably one of the main concerns for DAO shareholders and token holders. And like to not give this up to a snapshot, I believe is not really in the spirit of a DAO, and it would be more akin to a private company. Which I don't know. I'm not a legal expert here. That's probably good for new. What is his name? Already forgot.
Guard. Mm-hmm.
Yeah, probably be a question for Guard. But I don't believe that this would necessarily even be up to legal standards. Like, how can the DAO not have some input over salaries?
So
or
in
like,
a normal corporate
sure,
shareholder voting situation, there are things that the board exercises discretion over and things that it does not. And we have not a corporate setup, but you'll recall that when we embarked on this,
what does the DAO actually set up as? Like, what is the
it's not
legal
set up
structure of
as
the DAO?
anything. That's what Guard is here to help us with. And I believe that his current guidance. Well, I actually am not sure. I'm not a lawyer, so I don't want to quote him. But that would be a fine thing to look at. But today our DAO, let's say, is set up as a DAO.
Yeah, sure. And then I'll just
now,
ask
being
you
a DAO
question,
doesn't mean that everything that happens gets voted on.
Levels after okay, once they're already set in place, I'm sure nothing there can really be done. Once you introduce a change to compensation levels, should people that are in a DAO or like stakeholders of a DAO be allowed to vote on that?
Let me put it this way, Priest. You recall that we voted for KIP 12.
Yeah.
And KIP 12 did certain things. It, among them, granted discretion for particular budgetary matters, to me in particular, as well as to Joey in our roles as CEO and CTO. We renewed that with KIP 21. Each time we did this, we set a time to live for those, right? We had a short deadline for each, right? One quarter. If we had intended to, as you put it, nepotistically drain the treasury of the DAO, I don't think that it would have been wise for us to provide that sort of Damocles over our heads. And we have. And you look at the calendar, it's quite close to the end of the quarter. And if we had wanted to have this discussion in a unilateral way, I wouldn't have it today. I would have it 2 weeks from now after we've renewed all of these things and nobody can prevent it from happening. This is an exercise in consensus, as all of the exercises we've had in the past have been. The reason we're talking about it, the reason we brought it up, was to hear all of these thoughts from the DAO. And this is much more valuable than setting up a snapshot vote and trying to sift through what it means.
Of this during a town hall.
Well, you have to start somewhere, and the first mention is always going to be exactly N of 1.
Okay, yeah. I mean, I guess you could say now you would be, like, at very least, I would expect like an announcement of this. It does feel a little.
It's not an announcement that we're doing it. It's the introduction of a topic for conversation, which is what we're currently doing. Is we're conversing.
During the town hall, I believe I think you were talking to Unleashed, and you were like talking about timelines for implementation. At least to me, it sounded like you wanted to implement this before the end of the month.
Well, because of some of the factors we haven't had a chance to talk about that motivate this sort of arrangement, this bridging arrangement, time, is something that I think about. As a CEO, I try to think about whether the contributors who are driving value to this enterprise for all of us are able to do their jobs, and are able to be retained.
I'll come back to that later. Yeah.
And so what I would like is that if contributors are having their quality of life destroyed, that it's able to be acted on with some kind of expediency. However, not with the kind of expediency that would compromise the legitimacy of what we do, which is why we're here. And so I'm not exactly sure of my exact words then, but if I said something along the lines of, it would be good to get this done quickly, that is a true fact, because many of our contributors are underwater on their taxes, debating with themselves whether they should become forced sellers of Rook, and wondering whether they should have ever joined this DAO or indeed this industry at all.
that is sadly a fact of this industry, and I believe every single. Actually, I'm not sure. I'm not sure what the price was in like November 2020, but I believe almost every single token holder currently is also underwater. It is a shared pain, and that is the risk you take when you go to a growing industry.
Token holders do not devote their waking lives to the service of this project. It's a very different situation, which is why we have different incentives and different structures for each, while ensuring that all of them are having a voice in the operations around what we do, which is
contribute to
why
capital.
we're doing it. I'm sorry?
And the token holders were who initially funded the Treasury. Even if you want to disagree with that fact, the token holder, you basically dumped on token holders through the incentive structure, through the incentivization of the hiding game. So the token holders were who initially funded the Treasury by being dumped on. So I do believe that you have some sort of responsibility towards
Priest,
those
I do believe that we all have a collective responsibility for managing the treasury of the DAO as the DAO's treasury.
I do not feel that it's really been
of any kind of income
presented.
that's ever been received, including income from a very sophisticated and very profitable MEV searcher, has been put at the service of the DAO and continues to be at the service of the DAO. I don't think that's changed.
I do believe we're currently making about like $700 in daily revenue, maybe like $300. So yeah, that is being contributed to the DAO. That is correct.
But I'm sorry, so you're no. You're saying on the one hand that all of this treasury value
was being generated by dumping on token holders. Yes.
Priest, I don't feel that this is a very productive conversation. I'm not sure that what it is that you would like to see. Perhaps if we went back and you framed your vision.
Again, I brought this up like half a year ago, but a structural change in how the DAO is actually governed. I do not believe that token holders currently have any sort of fair representation. I do not believe that the sovereign role is really a necessary role.
So you feel that token-weighted voting is how we should structure this?
Yes.
Why?
Because I believe token holders currently have zero voice. And a DAO,
what is it that you're doing currently? Is this voice Is this voice that you're doing right now, or as a token holder?
As in, like, if you want to go ahead and implement this without, like, my consensus, you could still do it.
And if I did that, what would you think you would do when we voted to renew my power to do exactly that?
Yes.
And so then what would occur?
Depends on who exactly is currently a token holder. The team has also 5 concerns. What actually is the strategic strategic reserve? Like, what is that being used for? What is can the team themselves vote on proposals?
The Treasury or the reserves, neither of them have ever voted on a proposal, and that there's no plans to do that.
Yeah. Okay.
I mean, it's verifiable on Snapchat.
Oh, no, I definitely don't believe that they've ever voted previously.
If we did have token-weighted voting, it wouldn't be my favorite thing for this DAO. Even putting myself in the opposite chair here, because if you look at the statistics, the amount of tokens controlled by essentially the team would be a supermajority.
I don't actually think that is true for Rook. I'm looking at the Saber streams, and they're pretty much getting insta-dumped. I do believe if you account for Treasury, obviously that would be true.
Well, so on the one hand, they're being insta-dumped. On the other hand, we shouldn't switch to USDC salary to prevent them being insta-dumped.
Oh no, I never said we shouldn't switch to USDC salaries. Please don't misquote me. I do have an issue with how they are being calculated.
Okay, so maybe since we're discussing compensation structure right now, we can get back to that discussion then, and we can talk more about the bigger picture things that you're seeing here.
Later, on a later date. So again, I forgot again. It was a previous call. You were the team at least, or I think you specifically, were mentioning Olympus DAO and Yearn as sort of like a consensus or like a leader in what industry relative competitive rates should be like.
We look at
Olympus is also
a lot of different things.
The compensation docs.
So this is a discussion about compensation structure. If you want to talk about leveling, you can have a separate discussion about leveling. It is not a discussion about leveling. If your leveling is the same as your total compensation. If you're level N, you get a certain amount. If you're level N
Okay,
plus 1, you get a certain amount.
the biggest concern is with leveling them, and the secondary concern is then structure.
Well, but this is a discussion only about structure. So you can make a separate discussion about leveling if you like.
Sure, okay, I guess. Then, yeah. Why do you feel it to be... What is exactly the reasoning for implementing a 2.5 where basically just you erase the entirety of the bear market and just pay it out at original cost in USDC? That's just drains the treasury. Like there's absolutely, it's good for contributors, sure, I'll give you that. But when they came to work for Rook,
it is not erasing.
There is some market risk, obviously.
It is not erasing
the bear market.
The bear market has been happening for a year.
For their salaries in that 2.5 period, how would that not be erasing the bear market?
Is that what you feel the intention of 2.5 is?
Feel that, yeah.
Okay.
Because I have a pretty large issue with paying, again, I forgot the number already, 672,000 in USDCs, in stables. That would be 56,000 per month. So 112,000 for you and Jay-Z combined just for a single month. 224,000 for only the 2-month period. I don't, like, there was a reason the stable amount was initially capped at 176,000. Now trying to erase that cap and then paying yourself your full salary of
we're not trying to erase the cap. So my question for you is this mostly about leadership that you're concerned about, or is this a concern for all contributors?
This is mostly about leadership.
Okay. So what do you think would be something that would be fair for leadership?
Again, first of all, this is not, as you said before, apparently this is not a discussion about levels, but I think levels need to be seriously looked at and more adjusted to industry standards. I've yet to find a single DAO that pays even the top contributors as much as we are currently doing.
So is that, by top contributors, do you mean leadership?
Yes.
So 2 people, that you're speaking specifically about me and Joey.
You and Joey, let me see. L3 is currently standing at, what the fuck is that thing? 398. Maybe a little bit on L3, but that's less of a concern. So L5
Why
and
is it
L3
less of a concern? I'm just curious.
Because I believe it's more in line with where it should be. I think 400 grand in total is still significantly higher than what I've previously looked at. Like, Olympus, as an example, pays at most 300K per year. So we're paying 30% more than Olympus.
You think that the core leadership of these DeFi protocols is primarily compensated with a salary or with an allocation of tokens?
I believe most salaries actually already include an allocation of tokens. If you were a founder, obviously you have a previous allocation. But you were not a founder, so you don't have a previous token allocation.
But I'm not speaking about myself in particular. I'm simply asking if you think that these published salaries for top leadership of DeFi protocols are the whole story when it comes to their compensation.
I would guess so, yeah. Unless they were a founder, if you talk about founder share, that would be a different story. Like if you want to found a protocol,
what I'm suggesting is that it's certainly possible.
If they get additional tokens on top, that would be considered under the current compensation. So yes, I do believe that on a recurring monthly basis, that is the end of the salaries.
That they would present that information by rolling it into their salary.
Do you have any examples of that?
I'm simply offering a basis for skepticism.
But it needs to be skepticism that's based on something. Like you can't just put a skepticism out there without any actual backing or evidence.
I think you'll agree with me that the basis is this is DeFi, and everybody is rugging everybody half the time. So, I mean, if you don't have that skepticism, then why are we having this discussion?
You think that the top tier, Aave, Compound, all of our top tier protocols are essentially rugging their token holders by paying out salaries in secret.
I'm using rugging in a purely colloquial sense. I'm suggesting merely that as with almost every public company or enterprise that has leadership, salary does not tell the whole story. That's all.
That's the good thing about blockchains. They are transparent. And I do believe, maybe I'm too overly optimistic here, but I do believe that the founders were secretly paying themselves more tokens that they probably would have been picked on by chain sleuths. How the fuck do you say that word? Sleuths?
All right, so
yeah.
This discussion is very wide-ranging. So what I'm hearing is that you have concerns about the level at which our
and the structure.
Top two pieces of leadership are compensated.
Top
right?
two specifically,
well,
again,
it sounds like, to be honest, you have a lot of problems. I'm trying to make some actionable things that maybe can help alleviate those problems, because if other people also have them, they may not be here to speak for them. So on the one, I'm seeing that you have a concern about the level at which our top leadership, or let's say it's L5s, are compensated, right?
Yes.
And how would you like to see that handled? It's hard to simply say, let's make it. Oh, well, and where did we come up with that number?
By looking at comparable salaries for other DAOs.
Okay. So you'd like to have it cut in half. So wouldn't that look a lot like the L3?
Yeah.
So
and then
would
you just onwards. Again, my main concern is with the top contributors, because I believe there's an out-shared discrepancy here. I don't believe that there's I do still believe that there's discrepancies in lower levels. It's simply not as large. So there does need to be additional adjustments from previous levels. Mm-hmm. But it doesn't need to be as drastic as with L5s.
Gotcha. And in terms of this structure that's been proposed, it sounds like your key concern is about 2.5, this bridging measure, right?
Yes.
And specifically, the fact that it's offering USDC at the total compensation for the contributor.
Not accounting for the decrease in Rook price and what their their current compensation would look like at the current Rook price.
Mm-hmm.
And also, additionally, I do believe that in 2.5 there should also still be a cap on how much USDC you would be able to get out. For example, I don't believe that people making 300K a year should be able to get 300K in stables out, even if it's a temporary 2-month period.
So if they're making 300K a year and it's 2 months, I don't see how they would get 300K.
Yeah, no, if they want to readjust, for example, somebody making 300K originally took 100K in stables, 200K in a Rook. If they want to readjust their percentages to be 176K in stables and 124K in Rook, I'd be fine with that.
Those cases are the minority, unfortunately. I mean, that wouldn't change very much about the current cap table.
Okay, but then where's the concern? If the majority of contributors get their majority of their salary already at the cap of 176,000, then where's the concern here?
The concern is called tax burden. Tax burden. Because taxes are realized on receipt of the taxable assets. So just about every single person in the DAO, and particularly leadership, which, as you've pointed out, is compensated at a higher rate than others, has a tax burden far larger than the amount of USDC that they've actually been paid. So that's one concern.
To bail people out because the DAO made a bad financial decision to begin with.
Bailing people out is not
because we paid our contributors.
Priest, I don't think you understand that this is a productive enterprise. It is not an exercise in social clubbing, bailing people out. If you would prefer it, if the entire team leaves as a result of, market conditions and realities that not only us, but every company in this economy and every DAO is looking at and adjusting for. If you feel that that's not something that we ought to do, because that would be worse than
you're adjusting the wrong
exodus.
Way. Every single DAO I've looked at is adjusting their salaries downwards. 2.5 would essentially, in essence, be an increase in salaries.
That is not the essence of 2.5.
Okay.
That's not the essence.
Okay, if you can't argue from good faith, would the DAO be paying out more in 2.5?
I'm not arguing with you, Priest. This is intended to be a discussion.
Okay.
In fact, I think maybe we should hear from some of our other people who have been spending many hours looking at this. And by the way, I would invite anybody else who has thoughts to go ahead and raise their hand and ask as well. Priest, that is not to say that you are not able to speak anymore. I just want to make sure that you and I are not crowding this stage here.
Yeah, one thing I wanted to say, and maybe we can get your perspective, Priest, since I know you have a lot of concerns, but I know you've talked a little bit about just governance structures overall and looking at token weight and voting to try to understand what the true consensus around this is. What would be your feeling, Priest, on how we would get soft consensus? Obviously it's not our voice, it's not just your voice, not that I want to bucket like that, but what's the best way to get soft consensus and see how the rest of the population truly feels in your mind?
I think, first of all, I would like hard consensus. That's the first. Secondly, I do believe ping in Discord would probably be a start. Secondly, I do still believe that if people were looking at something, if I were somebody that's working full time and doing DeFi on that side, and I have a significant stake in the protocol, I would probably still be voting. So a snapshot vote is still probably the best way to get people's attention. So set a weekly snapshot vote that lasts a week, linked to whatever compensation structure document we currently have, and then discussion over that can probably begin.
Got it. Thank you for that. Yeah, I guess if anybody else has any opinion on this, wants to hop up on stage, please let us know.
Wait, Paisha, just quickly, I just saw your voice chat text. Aren't you essentially agreeing with me? Because the vast majority of early hiding game farmers didn't keep the Rook emissions and just market sold them, that is essentially distributing the treasury from token holders to the Rook treasury. You just are it's basically a more inefficient way of an Olympus bond.
That would be pretty hard. I mean, do you have hard numbers that the people that bought before the start of hiding game emissions have held through this? I mean, it's a very kind of subjective place there, as to when rewards were done. There was a lot of speculation around price as well during those times. I mean, if you remember, wild swings in Rook price were pretty common earlier in those days. I wouldn't say that token holders supplied the entire treasury. That just doesn't add up to me.
Okay, then the main the treasury was built through the hiding game emissions.
Right.
In order to get a decent notion of how much token holders were dumped on, you would have to look at how much hiding game volume was actually organic and how much volume was just farming the rewards and dumping them. I do not have the numbers on hand, but talking to people that were previously in this community and also some people that actually abused the system, it is my belief that the vast majority of hiding game rewards were the vast majority of hiding game volume was simply farm and dumping. If the team has any hard numbers that can disprove me on this, please go ahead. I don't have nearly as large, I wasn't here back in March. I'm only talking to people that were here at the time. So if you have any kind of numbers that this proves my current position, sure, go ahead. I would be happy to change my position on that. Unless this is a discussion about whether or not the hiding game incentives themselves, even
Priest, you realize that nobody on this call was even here when that was happening.
I do believe Deeds might have been.
And I have held through all of this, by the way.
So you were dumped on. But now you're getting paid by the treasury, so I guess it's
Well, he's getting paid. In fact, Priest, Kyle, he's being paid, Priest, to uproot his life, quit his job, and put his whole life around this project that everybody else gets the luxury of just checking in on a Discord in. So he's put his career on hold. He's put his marriage in a little Schrodinger's box on whether this is a good decision or a bad decision. He's constructed his entire life around this project, as have all of these contributors. Getting paid is really, and I speak
This was more so
for
a
everybody.
comment on the poetic kind of
Priest, I don't think that this is
justice.
something that you quite understand. People have other things they could do with their lives.
I agree. I do believe also that people should be somewhat responsible for their actions and their decisions.
I'm not sure I understand.
Responsible adults are paying taxes.
Okay, you cannot say that, okay, I chose this job, and now because I'm sorry, it's hurting me a little bit. Like,
Priest, if
you
it
didn't choose
pleases
this
you,
job in the first
if it
place.
pleases you, I will find a way to sneak this 2 months of extra compensation through governance and into these people's pockets.
I'm sure you will.
Why are you sure of that?
Because I believe that it is something you want to implement. Not only, I do actually believe that you care for these contributors, but I do not believe that you kind of view the Treasury as a slush fund. I don't believe you accurately understand what a DAO really is. I believe you view it more as a private company you're leading, and more as like an intellectual exercise for yourself to indulge on.
Wow. Okay.
I think that is fundamentally wrong, but that's my opinion.
Yeah, it's my own assessment based on the previous, 8 months of, oh my god, it's always been 8 months. 8 months of time spent here.
I'm at a loss. I'm sorry.
On that note, we're on the third concern so far. What actually, we've doubled basically our team size since before the coordination game came out, but there's been 0 new releases, 0 integration partnerships that have actually gone live. GMX was supposed to be here 3 months ago, and there's been no visible increase in productivity due to us doubling our team size and spending significantly more, which I believe it's probably a large part of where my frustration comes from. How can we almost double and triple our team size and then still not deliver anything for half a year?
That seems very incredible to me, right?
It's been half a year.
Since we doubled our team size, it's been half a year? 3
Not
months?
since January. Okay.
Now 12 months?
We implemented a new compensation plan it was when you became CEO, which was in, I don't even remember, November, October?
No, that would
And
be
then
January.
it was continuous hiring afterwards. And since
Continuous,
then, since the beginning,
except for the 3 month period in which we didn't hire anybody.
I do believe we were hiring back then as well, but I could be wrong about that.
Oh, you are wrong, I'm telling you.
So, again, what has really been accomplished since January? We did launch the coordination game, which was mostly built upon previous work.
Well, Priest, it sounds like you've got this figured out. It sounds like you've got this in hand.
Where's the
perhaps if you phrased the question in a way that allowed me to do that, I would.
Okay,
if you look at the audience right now, Priest, you've got pretty much the entire team here. So why don't we have somebody else come and explain what we've gotten for our money? Okay?
I would love that, yeah.
Pi, why don't you come up here and explain something about, how it's different today than it was in January? Well, Pi's on a call, so I guess he can't do that. Maybe Kyle or G-Man or anybody else would like to come
Why is there no concrete evidence you can point to and say, okay, this was accomplished faster, more efficiently, better, because we increased our team by twice as much?
You realize we're preparing a quarterly report, Priest, right?
I know,
remember, we released a quarterly report at the end of last quarter, which is a little bit less than 3 months ago, right? Remember that?
Yes, I remember that
report. Yes. That report, I think, was the first report after we had staffed to the current level that we have, and it detailed many of the things that we were able to accomplish as a result of that. And in this report, I think there's going to be even more detail of the things that we're able to accomplish.
Why? Okay, that's great. Why is none of this even slightly visible?
I mean, have you looked at our GitHub or anything? I mean,
okay, you were branding yourself as a B2B company. There's been integrations teased for basically half a year that were teased as coming, like right around the corner coming, and there's been literally radio silence on that. Like, how is that possible?
I'm not. How has there been radio silence? Radio silence since when? So since the end of what the catalog announcement, I guess. So since for the last 3 months there hasn't been as much of a drumbeat about integrations. Is that?
There's been nothing implemented.
Well, you actually don't really know what's been implemented.
GMX
in fact,
was supposed to be around the corner since like forgive me on the month there, but I think it was like April, March, something like that.
G-Man's been working on GMX, so look, here he is.
Hi, Priest.
How are you doing?
So, good. Regarding GMX, I think something that's not easily visible is where the bottlenecks happen in terms of development. I think we're probably one of the fastest moving development-wise in terms of integrations, but most of the bottlenecks usually come from the other protocols that are trying to integrate. For example, with GMX, we've been trying to troubleshoot their ends of WebSocket issues for about a month now. Those are all solved now, so we're making really good progress on optimizing the strategy for taking advantage of the oracles and doing everything we're supposed to be doing. But for a full month, it's kind of something that we can't work around when the other side of the integration is either away on vacation or needs some assistance in getting things to work properly. So there's progress being made there, but it's not like we're going to come and make updates. Like, we need to wait for the other side of the integration to get going to continue. It's just a matter of working with them as quickly as possible and telling you when it's about to go live. Otherwise, I don't see the huge benefit to putting out updates that could be coming from the other side. Does that make sense?
Yeah, that makes sense. I'm simply like
I can share some chats that we have. Like, I mean, it would probably be pretty boring because it's like we're in a Telegram chat together and we have daily conversations. But I mean, I don't know if that would be useful or if you'd want to be involved in those chats because they're very technical.
I don't necessarily have the technical know-how to really be able to read into that. I think this is simply a mismatchment of expectations. We've announced this like almost half a year ago. I can empathize with the fact that it's possible that the GMX team is more of a limiting factor here than our own team, but there's been no other integrations and implemented since then. So I don't believe that every single team must be sandbagging us. So my logical conclusion there was that it wasn't all the other teams that were the limiting factor, but rather our own. I would be glad to be wrong about that.
So if we look at a calendar, all of these integrations, which require the coordination game, weren't going anywhere until after that thing launched, which was in April, right? So if you think of that as the starting line, the real starting line, okay, then it's less than half a year. So let's not say that, because that's not what we're talking about. At most, we're talking about a quarter, 1 quarter. The GMX integration and most of these other things are really hard to, and this is the reason we don't publish timelines, because it's not under our control exclusively. It's very difficult. We published essentially a memorandum of understanding about what we were doing with GMX and what we'd agreed to do together as soon as we knew what that was. And the rest of it was engineers talking with each other, people in GMX going on vacation, and it's just the technical things that we have to do. It's complicated to put it together. It's worth it, but it's complicated. In the meantime, we've been learning a lot about what could make it easier in the future. G-Man has been working on replicating that strategy, creating a more generic version of it. And Troy, Kyle, and a lot of other people have been busy building partnerships with other projects to use that same tech, right? But we're not at the point in time where we would publish stuff that about where we are on that, right? But this is something that would certainly be collated in a quarterly report for this purpose, right? To make sure that people understand where we are, what we're doing, where we've come from, where we're going, right?
And that point, I'm mad enough to admit, like, I genuinely thought it's been like half a year since CG launch. This has been a long 2 months.
Oh, geez, it's been
exactly 2 months.
Yeah, I mean, like my time, it felt like much longer, to be honest.
When we were preparing the quarterly report, I was surprised that we would be talking about coordination launch, because I was like, surely that was like forever ago, but no.
I do want to speak to.
I think something you got to understand is integrations are both sides, and we've created a ton of really great connections by going and showing the tech at these conferences, and we're in talks of just applying the things that we've already built with other DAOs, and other protocols. What you see now is going to take longer, like integrations that have taken 3 to 6 months. That's because they haven't been done before. But I think some of these protocols are very similar to each other because they fork from each other. So I think now it's going to get faster as long as the other side of the integration is able to keep up with our pace, because we're already going to have everything built, and we're going to have kind of like a cookie cutter way of applying the integrations to different protocols. Each one is different, of course, but a lot of them will kind of rhyme and be easier to implement because we've solved all the problems with the first integration of that type. But again, it's only been 2 months.
Yeah.
Something that we've discussed that would be fun is, I mean, Troy, are you at a conference? Could you get up here and like talk through your experience going to some of these conferences? I mean, some of this will be in the quarterly report. I think Troy's busy right now. But
is this working?
Yeah.
Yes.
You can hear me?
This is something we've badly needed, Troy. We've thought about literally strapping a camera to Troy and having him live stream just for the DAO to see.
Yeah, and it was actually nice the other day because I brought like Ash, and I'm going to start bringing, especially engineers and stuff, because I want them to see, because I know there's be a bit of a disconnect between like what the perception of the project is compared to like what it's like when you're talking to people. Like Lona from the community got to kick around with me at Consensus and watch me talk to people. Every single person I talk to and explain what we're doing and describe it, once they get it and there's a very clear light bulb moment for them, they say it's the most exciting project they've heard about in the last year. Literally every time. I mean, every single one. It feels like the greatest project I've ever to show. Like, I'm not even being facetious or anything. Like, this is one of the most fun projects to introduce people to. I'll typically, when I'm going to these conferences, right, say we're at an event, there's 5 people that are none of them know each other, and I'll go up and say, can I join you? Everybody does the intro as far as like, what do you do? I'll say, I'm Rook, and they say, what does Rook do? And I'll kind of give the background. Every single person reaches out to connect with me, and then has to go and act like they're interested in connecting with other people, like the rest of the people in the group. But like I cannot stress enough how excited people are about this, and not just what we've built, because they're excited about that. Limit orders are a niche market, right? Like the fit for limit orders is just not there for everybody. But what we are building, and that's a lot of the things that I'm talking about, are the things that we have coming down the pipe. And Jesus, the amount of interest that we have, assuming it works like we think it's going to work, the amount of interest we have is unbelievable.
I mean, let me just say, like, I would not still be here at this point if I didn't think that Rook's tech, at least from a concept level, is something that is interesting and, like Paisha said, novel. It's simply the usual pace of development in DeFi, I think, at least in my perception, is just, there's a mismatch of expectations for me, at least from my perspective. Maybe that's because the tech is, for other protocols, is not as novel as ours, but the pace of development, at least, when seen from an outside perspective, seems to be happening at a much faster rate. For example, if you just look at Butterfly's Redacted's team, they're shipping like ridiculous stuff that's also relatively novel. They've been, I don't even remember, I think they launched in like either January or February, and they're shipping like their third or fourth product already. It's like the pace of development is, and with a smaller team than ours, the pace of development is just different. But I do agree the tech itself, or like the promise of tech underlying Rook, is definitely very interesting.
I'll go ahead and this is one of the most impressive engineering teams I've ever seen that we have here. I don't. We might have the most impressive engineering team here, and in no way is anything being done slow here.
Something that's not really publicly known is exactly the scope of what it is we're even working on. We're actually working across 3 different verticals and 3 different types of product. 3 is putting it probably on the small end. You could argue that there's other types of products that we're doing too, but kind of roll those under these other categories. So the full scope is probably not something that a lot of people are aware of, and I'm not familiar with Butterfly, but well, in the quarterly report, we'll have a breakdown of some of the things that have been shipped this quarter. And really, we're talking about really the last 2 months, essentially, because most of what was shipped was obviously shipped with the coordinator that went out in April. But a lot of really big things and small things across a spectrum of different products that are. I don't know what Butterfly's up to, so I can't say, in terms of complexity, if it's different, but I know that it is different. And from my experience as, leading teams in other types of organizations and startups and in big tech, I would say their development pace is actually quite rapid for what I would consider a sustainable pace for a team. This is just coming from me, so, I'm maybe not the most trusted messenger here, but I think that I'm laughing because I'm thinking back to basically December, where we were just paralyzed. We couldn't ship anything because we just did not have the people to do it. It was just pure maintenance practically. It was just a nightmare. So I think if there's a perception that things are slow, maybe the best way to help that would be to talk a little bit more about the things that we're doing and that we're shipping, and maybe what's involved in doing them, just to make it clear a little bit more what the process is like, how many moving parts are involved. For example, Gman's integration with GMX involves him coordinating with GMX, with several of their protocol engineers, with several of our keepers, with our protocol team, with our development team, our business development team as well, and his own software, the software that he's working on our side for this. There's a lot of different pieces involved, right? But the result is, hopefully, we hope, very good and perhaps very profitable for everybody involved and replicatable. So we should be able to do this after the first time. You do it more and more. You learn all the things that make it go faster, ultimately.
So just as a side note, like I brought this up also like 8 months ago, and that's something that's always in the back of my mind and just like irking me. Why has the Treasury bot not been updated? Like every week we get like half a dozen people that come in and ask about our Treasury. And I don't believe like this is like, to me at least, what has been irking me, because it seems like something that could be fixed in a matter of minutes, but has been allowed to persist for over half a year.
I can answer that. That piece of tech, that bot, was written by a former mod that's no longer here, and a new bot has not been made for it. There's also been no one that's stepped forward and offered to build a new bot, and it's not been something we've prioritized. When people ask about the Treasury, it's not hard for us to drop a link.
And if maybe I'm not a technical person, but could you not just like link to pull the data from a different set? Like we have a Do Analytics bot that has the correct Treasury value. Can you not just replace where it's currently pulling the data from with that new link?
No, that's not accessible from Discord, and that bot is hosted on that individual's own private server or whatever. So that's not something that any of us have access to.
Gotcha. Just to me, like it was a bad look, because something that again was asked. Like the people that ask it are the people that already like have a higher interest. The people that don't ask it then walk away with a false impression. There's way more than half a dozen people that actually have a wrong impression about our Treasury value. Okay, good to hear, Pasha. So Pasha was, yeah.
Yeah, so, there is somebody that has shown interest in building that new bot. So, I'll just remove the bot for now. We can answer the question, and then when there's an accurate one, we'll go ahead and add a new bot. But if this has become such an issue,
no, so it's just an amalgamation. It's like one of these small things that builds up.
In regards to nothing, being done with tripling the team, I just, I know it's hard. There still is information asymmetry there, but there have been fantastic updates, not just on the front end web app that you see publicly, but on all the tech that's happened underneath, whether it's Ninja and getting amazing upgrades from Zubair and Mia working on it, and the rest of the protocol team, and the different products that we have being built. Like it's there are updates, there are things that we talk about, there are bugs that get fixed all the time, and that is in our announcements and updates channel. Like we are talking about a lot of those things. So I just really don't think it's fair to say that nothing's been done and we've tripled our team. So,
yeah, I think that this don't really have much more to talk about unless we want to address like for example, Hazard. What actually do you want me to write up a proposal for how 2.5 could be improved? Or like, what is the actual resolution here? Is there a resolution, or are you just going to push it through?
How would I push it through?
Gotcha, okay.
I currently have the power to do it.
Yeah, no, I'm just asking. That's why I'm asking. Is it worth it for me to write a proposal or not?
It might. Well, there's a couple of ways, to be honest. Frankly, to me, compensation falls under operational stuff that the DAO should review and approve and consent to, but not necessarily craft, if that makes sense, because there's a misalignment of incentives there. I have an incentive to ensure that everybody's in agreement about how we compensate people. That's part of my role. But without that bridge, for the same reason that boards don't set the salaries of people in a company, it becomes a little bit too down in the weeds. So if you want to craft a proposal,
there is a mismatch of incentives, because you are also in a way setting your own salary, which is like.
Am I setting my own salary?
Yes, with 2.5, you would essentially be paying yourself I don't know your exact structure, but you're being paid mostly in Rook, which is like roughly
See,
600K.
because
That's
the DAO
5
pays me
more,
as it pays all
125.
contributors.
Would be
I'm
paid like
paid as all
480K more.
contributors are by the DAO's consent in return for the creation of value for the DAO in
Agreed.
the long term.
But on an
Yes?
annualized basis, if you do implement 2.5, you would be paid like 480,000 more than you currently are.
But why would we annualize something which is to hold
Oh,
for
no,
2
it's
months?
easy. Okay, sure. Like 90K over 2 month period.
Right. Okay. I mean, I am a mathematician, so I can divide a number. So what is that supposed to tell me, though? What I need
It's
is I need to understand.
Of incentives. Like you brought up a mismatch of incentives regarding the board voting on salaries. I don't believe that
I'm speaking
the
in the
CEO deciding on
generic
salaries,
sense.
especially his own salary, is not an even worse mismatch of incentives. Unless you disagree with me there, but I believe that is probably a more.
It's not that I I'm
egregious
I'm
mismatch.
trying to understand where this is, like, how in what way am I deciding on my own salary? Because you realize that everything which I do is contingent upon the continued approval of the DAO. Yes?
Yes. Okay. Over the next 2 month period, if you do enact that, you would be giving yourself a current salary boost. Also,
Okay.
I'm not like, yeah, I'm even, and we'll see during the next voting cycle. But I have little confidence that there would be a change in the current structure. I think DAOs, simply by design, especially during a bear market, are pretty static and more calcified than not.
Well, sorry, what is calcified? I don't mean
DAO.
what is the word. I mean, what exactly is it that's calcifying?
If you want to then vote on a new structure, I don't believe we really had, like, every single member that I came in like October. I joined Rook in October. Every single active member that was with me at that time has basically either left or has been banned. There's
every
no
single active member who's been very
or
helpful
team,
since I joined this Discord is either me or is working for labs.
Yeah, exactly. There's
and
no
that's
community
not
members
because
left.
Priest.
There's 0 community members left.
I think
like
you're misunderstanding something very fundamental.
Like a couple people were hired, the rest of the people
Priest,
left.
This community isn't defined by the people who hold Rook, but are not paid by Rook Labs. I, just like G-Man and Kyle and Tommy and Troy and Paishaw and everybody else, came out of this Discord. We decided that we liked this Discord so much that we were going to drop everything else that we were doing in our lives and quit our, and I can assure you, in my case at least, very high-paying job to come and go full on and make this into our lives. And I'm not saying that you should respect that. You don't have to do anything. I'm just saying that this DAO is almost unique to my knowledge in the fact that its community crawled up out of the Discord and into the cockpit. And I don't think that that should take away from those people the fact that they were and still are part of this community. We are the part of the community which spends every waking hour thinking about this community and driving value to that community.
I would phrase that slightly differently. I think every single community member who's currently not being employed and paid by Rook has left. Is that a fair assessment or not?
Well, you're here. I see that Unleashed was here the other day.
Too stubborn and stupid.
My thought experiment to you would be, did they leave because they didn't like me and they didn't like the team or our pace or our product? Or did they leave because the price of Rook went into
all
the
of
toilet?
the above.
See, because when I look out at other projects, what I see is if the price is going up, you can forgive a lot. But if the price is
Agreed,
going down, it's time to get upset. But the thing is that
100%.
I don't have, you should know by now, I don't have control over the price, and nor does this team. We have some amount of control. There's some input that we have. We can build good things. We can drive good value. But the price is a lagging indicator of that. And there are other forces which have far more impact on it than on us. On the long term, of course, yeah. But, in the span of a few months, even a year, we're at the mercy of the market.
And that is a separate discussion. I think it's a bit more nuanced than that, but that would be a multi-hour discussion.
But what I'm suggesting is
I
that
do believe
you need to understand the difference between people who leave because they're unsatisfied with the way things are happening and who leave because they're unsatisfied with the way things turned out for their investment.
Most other communities I'm a part of, which is not that many, it's like maybe 3, they do still have a core community that stayed around even when the price was depressed. Like a lot of protocols are down like 90, I think Butterfly is down like 98, 99% from its all-time high, and they still have an active core community that is not being paid and is just there in Discord. I think the fact that Rook does not have that anymore, and that every single core active member that has not joined has left, I think that is something, at least a metric to look at and consider. I don't think that's something you can simply ignore.
I don't ignore it. In fact, is Synth here? Where's Synth? Are you? Yeah, you're here by a microphone.
Paid, but yeah.
So, well.
And that's my point. Like, if you're.
My ask for Synth was make the Discord a good place to be. Build a healthy community. Help us build that and retain that because that's important. So Synth was given a mission, right? Because it is important. We've all noticed the, drain of the community. Many of us used to be in a very different community, myself included, when we were here. It's hard to attribute causes, just as it's hard to reverse trends. Doesn't mean we're not trying, right? But what I'm hearing is that, and I'm not hearing it, you're not exactly saying it, maybe you can help me out, is that the reason for this has something to do with the way that we govern this DAO.
So what is that question?
The reason that our community has left is because we don't govern the DAO in a way that listens to that community.
Again, it's a multitude of reasons. I agree with you. The largest factor of this is the price, but that is how the majority of people leave. Like 95% of people have left because of the price. The last 5% core community that normally remains in a DAO or in a Discord that is not being paid and is actively contributing, stay there because they believe in the vision and they believe in the team. I still believe in the vision. I believe a lot of the other people that have left have lost faith in the team. What kind of factors led to that loss of trust are your own to decide. I don't have insight into their mind. I can only speculate. And I don't necessarily have the golden answer or the blueprint for how we can change it and turn it around. I don't know. I don't have the answer to that. I'm simply making the observation that has happened. And yeah, I'm not being paid to figure this one out. But I do believe
without any evidence from them,
how the community is run. Yes.
How the community is run. What does that mean specifically? Yes. How it's moderated?
Okay, we had like 5 people that used to be very active here.
No. I know that many of them set up their own community. Perhaps that's had a contributing effect.
They set up their own community because they were being banned in our community.
That's certainly not true.
It is true because I'm a part of that community, and it's been pretty clear that this was indeed the point.
So were these active members being banned, or were they leaving? I don't understand.
You're saying that server was set up because everybody got banned from here?
Because they got censored, and afterwards we started banning people, yes.
Censored.
Instead of saying that they were censored, I would say that they set up a server because they were shitposting in violation of the rules.
Venting, yes. Venting
so
because of the structural
right.
issue. that they perceive.
Yes, we live in a society, Priest, and as all servers have on the internet, there are rules, right? And
I'm not talking about like racist
to enforce the rules. I don't know what the rules are. It doesn't really matter. If they're there, they have to be followed. We all have to do that.
I agree with you on the more like anything that goes over like an ethical line, sure, yeah. Anything that pertains to the protocol and how it's managed, I believe the language there shouldn't really be censored. If somebody is criticizing the team or a point of the team or a member of the team, I think actually it's a more nuanced discussion. I don't know. It depends on what exactly it is. But I do believe there should be more clarity.
I'll be honest. It is. I don't know. It is really hard, Priest, because part of me agrees with you, and we've had a lighter hand at some times, and then part of me knows the experience of being on the other side and knows how shitty it is, and has had to let go of contributors, really talented contributors who were just amazing for the DAO because they just couldn't stand working in a place that just sort of mocked them, really. And it's like, on the one hand, I'm like, well, not everybody's cut out to do this, right? On the other hand, it's sort of like, well, surely we can do a little bit better, right? As they do in many other DAOs, because like by the same token that you mentioned of, there are DAOs that are down bad and they have a core community still. In most cases, that core community are not as put out as this one.
I agree, but I think like you're making a mistake. You have to consider why that core, the sentiment actually, why that originated, where that came from. I don't believe it's simply because the people that used to hold Rook are like
no,
mentally
I'm not trying to simplify. I think about this all day.
Or like insinuate.
I think about this all the time. I have been in contact with many of these people, more than folks would expect, right? Because I care about it. It's hard for me to see a way to do more for them than has been done. Like I mentioned, we're here talking because of a commitment to consensus, as we've had from the beginning. We're responsive in the Discord.
Out a little bit. I agree. Like, I appreciate the effort being made.
It wasn't forced out.
A little forced.
How would it be forced exactly? If we made the first move here. We made the first move, no?
How do you mean? I had to address the issue before it was being like, yes, you invited me to come up here, but I still had to first address the issue. And I can guarantee you, the vast majority of this Discord didn't know that there was a compensation change happening.
Well, there wasn't. I need to be very clear with you again. There isn't a compensation change happening. There is a discussion about a compensation change happening. The discussion was something that was brought up on Friday.
Because I saw a lack of discussion prior to
So, Priest, is your suggestion that I wrote that document just to respond to your comments in the general chat? I wrote it in about, 3 minutes? Prepared that just for you?
My response to that is I think you would release that document once it's been implemented to explain what's being changed.
This isn't even the full document. The actual document for it is somewhere else. This was prepared long ago for today's Treasury call.
Why wasn't this posted?
As a follow-up to what we're talking about on Friday. And we actually responded to, I think it was Unleashed, saying that we'd prepare that additional document for him and for anybody else who wanted to chat about this.
But the document was ready. Like, why wasn't this already posted?
Because I actually asked Matt, because I thought it would distract from the panelists.
Okay, and
because I didn't want to post it and have I didn't also during the weekend want to have a really contentious discussion about compensation because it's a sensitive topic. We all understand that. I didn't want to post it in the middle of the weekend and then have a bunch of team members having to kind of, use their weekend to address fears and concerns on the Discord or, post it and then not have people responding or able to respond to folks in the community who had questions, right? I want it to be a time when people were available to answer questions, to talk through points and to talk about it. And also at a time when it wasn't going to distract from the important things that the panel today had to say about, lending risk and stuff.
I do believe it would be better to post on the weekend, because I think, again, most people probably don't do this full time and don't have time to, like, during a work day, catch up on this stuff. So I believe more effort should be made to include those people in the governing decisions being made.
And what would more effort look like? Give me
Again,
a
like, just post it on
metric
Friday.
that I can use that would satisfy more effort. Because the reason I ask is because if I were to ask Kyle, for example, or Matt, to, on a scale of, some to none to most, more effort, ask how much effort we put in to communicating things, they would probably tell me that no, it feels like a lot. It feels like a lot. But clearly for you, it doesn't feel like a lot. And some of that might be legitimate. And so what I want to hear from you is, like, instead of just describing it in like relative terms, to describe what it would look like if it was a lot.
I
or if it was
wasn't
enough.
really active in this Discord for a while now because I was on vacation and just like deep toxing a little bit. I do still check the snapshots. That is something I still do. I think that's the same with a lot of other people. Like, if you're in a DAO and you have very little time to catch up with what's currently happening, you go on the snapshots and you see what's currently trying to be passed. That is probably the single most effective way to get people's attention onto something. That obviously then comes in line with a more token holder or token based governing structure. But yes, that probably would be my main way of improving this.
Is to use token holder voting with a snapshot vote for discussions. You know that model is that every person who studies DAO governance, knows that model is deeply flawed and prone to many different types of attack.
Again, I talked with Pi about this previously. It's prone to attacks if you believe that the token holders are not the core, party of a DAO. The DAO itself,
that's not a nuance. That's not a nuance. Let me ask you, Priest. So let's say that I have a DAO and I want to pass a thing. I want to pass a proposal, and I'm going to use token holder voting to do that. And I'm a party. My name is Bob. I'm a party, and I really want to pass this. And so what I'm going to do is I'm going to use my millions and millions of dollars to borrow my quorum from Compound or Rari or whatever. So I'm going to borrow these governance tokens.
Rook
and I'm going to
market.
But Priest, when it does, Priest, would we change our governance or no?
You can change
it. Okay, so
I'm going to
borrow. Yes. I'm going to borrow some.
Prior, unless the person wants to then again, it's a fluid.
So now
discussion.
we're gonna spring the vote on people, and that's going to be an inclusive discussion. We're going to spring that snapshot vote up in hopes that.
No, you take a token distributed snapshot like a week before you actually put up the vote, and then you go based on those distributions. If somebody wants to hold a vast majority, borrow a vast majority of Rook and hold that for the multi-month period, then you can see in the lending markets whether or not that's being done. And even then, I would argue, if somebody wants to hold a vast majority of Rook tokens for that long of a period, I do still believe that token holder-based governance is far superior to any other governance, because I believe the token holder is the base unit of account here. If all token holders, even if somebody borrows a vast amount, wants to vote on a certain thing, I do believe it should be passed. But I agree that I understand that this is a controversial opinion.
It's extremely controversial. It's an extremely minority opinion in all forms of governance, including corporate governance. The idea that it's not that it's an opinion. It's the evidence has demonstrated again and again that is not a sufficiently durable model of governance to actually achieve the aims of any sort of collective enterprise.
For
example, I think you're going to see in a few months that every single project which has decided that it's going to have some kind of token holder majority vote thing.
I agree, yes.
Yeah, they're all going to go pop. All of them. Every single one of them. And in each case, it will not be because of the collective will of these long-time token holders and these loyal community members, but it will be because an actor appears who decides that this protocol is vulnerable and sways them to do something.
I understand. I believe that in of itself should be allowed to happen.
An incredibly naive opinion, Priest. Then how
That's
exactly?
survival of the fittest.
It's
If
not
you're weak
survival
and
of the
you're
fittest,
subject,
Priest.
you're
It's
subject
incredibly
to
naive.
a
No,
corporate
this is worse than code is law. DAOs are not simply piles of tokens, which is what you seem to believe. They're not piles of tokens. They're not.
That's
Just
not, I
like
believe,
any kind of other entity. Well, I'm afraid then that you're not. You're right. That this is not a DAO. That this is not a DAO. By your definition, your degenerate definition of a DAO, I use degenerate in the mathematical sense, not in the crypto sense. In your outlier opinion of a DAO, this is not a DAO. You're right. I understand it to not be that. I strongly disagree with that.
I agree with that, yes.
DAO. If it was a Moloch DAO or investment DAO, what you're saying makes perfect sense. Those are very elegant models, and they're very effective, and they're very incentive compatible. They're beautiful. But in this case, the Treasury was not composed using a Moloch
comes back to,
system.
again, I think it was sort of in a way.
And it
comes
also
back to the original discussion. Like it
yeah,
was
but it actually wasn't in any way. No, but it wasn't. There's absolutely no equivalence. There was no exchange. You know, the stakeholders of the DAO and a Moloch DAO put their assets into the Treasury. Yes. And those same assets remain in the Treasury under the jurisdiction of the collective until such time as they would like to remove a pro rata share of whatever remains. That is in no way what happened here.
The DAO
would ever been communicated
by
here.
token holders.
Priest, you're not even making an intellectually honest argument. That is just simply not what happened.
Let me state my first argument and tell me if you agree with it or not. Was the DAO Treasury funded by token holders?
I understand the premise of your argument.
Yes or no question.
It's a yes or no question, but I'm not going to give a yes or no answer because it depends.
And we can't really discuss, and we can't really engage in any sort of meaningful discussion.
There are two types of people who want yes or no answers. One is people in the Senate who are idiots. The other are children who are also idiots. Priest, you're not an idiot. This is a nuanced topic. Otherwise, you wouldn't have this nuanced opinion about it. You're not going to get me into some kind of a yes or no gotcha situation. You and I both know exactly how the Treasury was composed. And we know that it's not so simple as that. It's just not. And at no time was it intended to be a collective investment opportunity for people to manage these funds. The DAO Treasury was not the point of the DAO. It's not the mission of the DAO. It has nothing to do with the technology that we build.
My main, again, argument is regarding responsibility and what
responsibility
they should have.
I want to be very clear, Priest, and Disco, because you've asked about this too. This Treasury will not be redistributed. The governance was designed specifically to prevent that sort of predatory behavior from happening, because it is in conflict with the mission of the DAO.
Thank you for stating that. Yes. That, I respect you actually stating that, because I discussed this exact same topic about a month prior, and the entire team was basically trying to gaslight me into thinking that, yes, if the community voted for it, it would be distributed.
I think what they may have been trying to say is that if governance, as with anything, if governance
my point was directly regarding token holders. If the majority of token holders wanted to be distributed, it wouldn't be distributed. No, I'm okay with you saying that. Like, it's okay if that's made clear.
It's not a clarity issue.
I think maybe what your misconception would be is it would be redistributed if there was no further effort to be made and if the team just disappeared. But what we have here is a really strong team that's still working towards the goal and making progress every day.
Yeah, this is in no way a comment on the team or the product protocol. It is more so a discussion on an underlying core ethos of the DAO.
Yeah, I think I made the ethos clear then, I hope.
Yeah, you did. And I genuinely appreciate that. And I think it should have been made clear, and it now is. I just really dislike when somebody is trying to gaslight me into something.
Hey, Priest. Hey, how's it?
So this is still Treasury Tuesday. It's still kind of operating under, I guess, the rules and the guidelines I set forth through that. I think it's gone on, long enough. I think we've kind of discussed Treasury, related items. We've talked about governance related items. And I think we need to kind of focus and kind of tailor each of these discussions and have a really focused and refined, discussion and conversation around each of these attributes that are in here. So I think what we need to do is come up with action items, come up with what your heartaches are, Priest, and kind of bifurcate them into which, venue is the best way to discuss that. So if it's governance related, let's have a conversation on, Wednesday during the governance session. If it's something that's more community related, let's talk about during town halls. And so we'll just kind of come up with it from there. I think you guys can continue the conversation how you see fit in the general voice, but I think I'm going to go ahead and end the conversation on the stage at least. And I hope you understand why.
Yeah, no worries. Just a quick question before. If I did want to continue this discussion, especially we talk about levels later, especially in regards to 2.5 and the structuring, when would the most appropriate time be? Is that a government? Is it a town hall issue? What is that?
I think it depends on how narrow the conversation is, because obviously there are governance impacts to
just
everything.
Specifically to 2.5.
Yeah, I think probably Treasury Tuesdays is the most appropriate time, but I think we can definitely, not to steal Kyle or since Thunder during Town Hall, and they can correct me if I'm wrong, but I think that's also a good venue to kind of discuss things as well.
Gotcha, yeah.
Cool. Well, Priest, Hazard, anybody else have any final thoughts before I kind of close the stage?
Thanks for facilitating, Matt.
And Priest, I know we've had disagreements, or not me and you particularly, but just in general. We appreciate the passion. We appreciate you kind of making sure that your concerns are being voiced, that you're laying it out for the down. So not trying to gaslight. But keep in mind.
Yeah, thanks. I appreciate the time being spent here.
Thanks, everybody. Hope you have a great night, and go touch some grass. Take care.